There was an investor that I was introduced to, and the person who introduced me to said, "You're going to go on the call, and he's going to take the call in a crowded coffee shop without going on mute. So you're going to have to give this pitch with all this background noise and try to stay, you're attentive and really deliver this thing." And his theory was he does this just to see how founders respond.
I think without further ado, I'll pass the mic off to Andrew, founder of Peachscore. Take it away. Let us know who you are.
Yeah, so just as a quick intro, first off, thanks, Anthony, for having me on. Really love the engagement from the community that I've seen so far. And, by way of introduction to myself, I worked in the financial technology sector for 5 years, and really focusing on delivering data solutions for the institutions on Wall Street. So investment banks, hedge funds. I worked at a company called IHS Markit, which was bought by S&P Global for $44 billion in 2020, and then I moved over to the parent company, the New York Stock Exchange. Simultaneously, while working at some of my corporate day jobs, I started a few different businesses. So I have an entrepreneurial background. I was mining cryptocurrency at the industrial scale since 2017, when people thought I was pretty crazy at the time, and a lot has changed in that world. And then most recently, I started Peachscore, which is a platform in which entrepreneurs and founders can engage in a more meaningful way through data and analytics, right? And we created a FICO score equivalent for startup companies so that both startups and investors can quickly understand the structural health of a given business. So yeah, that's my background.
Nice. Can you give us a little more context on what is this Peachscore thing? Why should a startup founder sign up for that?
Sure. So Peachscore is essentially the way we look at it. It's in terms of a Venn diagram. It's LinkedIn in one area, Bloomberg in another, and then Product Hunt, right? And that middle section is what Peachscore essentially is. So it's a marketplace, it's a social network layer, and then it's bound together through this really rich AI-driven intelligence layer. And you have to think of it as a marketplace, both for the investor and the entrepreneur. So what's the value to the entrepreneur? It's essentially that through our system, we take you through the entire life cycle of kind of growing and scaling your business. So you can start as a pre-seed founder, understand the different metrics around your business in a deeper way by creating a profile on our platform. And that profile can be used to educate you against industry guidelines where in terms of your founding team, your market performance, the size of the market, revenue, all these metrics, kind of where you stand relative to other companies and industry standards. And then the next evolution of that is that same profile can be used to apply to multiple funds, to collect different resources, to even find customers. We have Fortune 500 companies on the platform that entrepreneurs are connecting with using that profile to pilot their products.
If I'm pitching to an investor, right? Normally, old school way, I just create a slide deck. I say like, hey, here's my revenue, here's our traction. Sounds like Peachscore is going a little bit beyond that. What is contributing to what makes Peachscore better than just showing up with a slide deck, old school style?
Yeah. So the way we look at it is it's a KPI driven analysis, right? So a slide deck, we view that as kind of one dimensional, right? There's no analytics on it. Whatever information you put in front of me as an investor, I have to manually validate, right? What we do in Peachscore is essentially we have a mechanism in which the data is analyzed and contextualized around, what is relevant to your industry, right? Is the growth rate that you're saying, on par with, the growth rate of other companies in the sector at the specific, let's say, round that you're in, right? So it's very dynamic in that analysis. So for the entrepreneur, you kind of understand, where am I falling and where can I improve? And what are the things that make me stand out relative to other companies? So it's a really amazing way to promote yourself. And the other difference on the investor front is they're able to quickly understand your business and get you an answer to like yes or no way faster. So one of the biggest things that we found as a problem for entrepreneurs is just saving time, right? Everyone on the phone needs more time to build their product. Now, there's two ways to solve that. The biggest one, which we found from interviewing over 500 founders from YC, Techstars, you name it, was that they have to spend hours, specifically 400 hours, submitting information online every 6 months. That's a ridiculous amount of time, right? So by consolidating all that information into a common app approach, you now get back all that time, right? If I could use my Peachscore profile to apply to 150 funds at once, find customers kind of in a completely automated way, that's a lot more time to get back to build your business. And the other side is a lot of time is spent, waiting to hear back from investors, going through that iteration. You can optimize that process, right, through Peachscore. By having that data there to be analyzed, investors can essentially understand you at a more holistic level and then give you that yes or no, right? And that's kind of the value that we drive on that front.
Yeah, this looks really cool. I just registered. I'm on the waiting list now for my account to be approved, which I hope it does. So one of the first things that comes to mind is like for the investors that are on the other side, they go in, are they using this? They're looking up startups. Do they get a Peachscore too?
No. So the Peachscore is used kind of like if you're familiar with like a Moody's credit rating, corporate credit rating. So it's for the actual company itself rather than the investor. What the investor is able to do, and it's kind of like the Tinderization of VC, which is they set their ideal criteria. And this is not like, generalities, right? The way we're building this application is at a very specific level. They can say, this is our thesis and what our ideal target is, right? And then based on the information that an entrepreneur provides in the Peachscore profile, they can basically get notified that, hey, I'm a founder. My company is a match for, XYZ fund. They can apply to that fund, and essentially that fund gets to analyze the data in that profile.
One thing for me, and this question actually came up with another woman entrepreneur that I was chatting with the other day, and she and I were talking about like getting funding before traction. How do you think that startups that are interested in going venture capital route could make themselves appealing to investors if they're pre-traction?
Yeah. So there's a few different factors. Pre-traction. So, we're talking, pre-seed investment. The best way to attract investment capital on that front is going to be twofold. And I think there's more than two, but I think these are the big levers. One is your founding team. The biggest bet and biggest aspect of the investment process at the pre-seed stage is, do these founders have what it takes to go 5, 7, 10 years to a potential exit? If you check those boxes, you've got domain expertise, you're complementary in your skill set. So, CEO, CTO, or if there's three of you, you have a CEO, CTO, and potentially a really, really effective salesperson. That seems to be a really great like archetype structure. But there's various, right? Variations of that. Those are the things. And the second element is, the problem you're solving. You want to be solving, especially if you're pre-traction, you want to present the business as a problem that is huge right now, growing, completely ubiquitous, and never going away.
Kind of related to that. If you don't have like traction already, if you don't have if you don't come from like a big name school, or if you're not an ex-Oogler, how important is it to VCs, your existing network? It doesn't matter who you know when it comes to fundraising. Is it possible for somebody to just break in with a good idea and a skill set?
Yeah. So the paradigm is definitely shifting, and I'm sure that everyone here on the call might be seeing that, right? So I think of VC, generally speaking, as kind of this walled garden party, right? It's all Stanford grads. It's all people from New York. It's all people from Silicon Valley. Now, there are a couple of factors that are changing that. So just one, the pandemic, right? Everyone's realizing, hey, you don't need to be in an office to collaborate, right? So now people are moving outside of cities, they're collaborating over Zoom, and turns out that's a very effective way to run a business and start a business up. Like we saw a 27% increase in new startup businesses from previous year to the one before that. So that's a good indicator. So it's important to realize that as time goes on, I think the school and the prestige around that, of what you go to, is going to decline. I think education is becoming a really accessible, aspect to everyone's lives now. I'm a big believer in YouTube University. That's kind of why we started Peachscore, which is we wanted to give people a platform, a democratized access to getting an at-bat with a prestigious investor if you don't have a relationship for that. And that's key, like giving people the opportunity to be evaluated on their business rather than, who they're buddies with at the MBA program they went to. And, the truth is innovation happens anywhere. And there's countless examples of people from outside of those hubs, creating billion-dollar businesses. But that'll be a progressive change over time. That's not going to be overnight, but things are swinging in that direction, I'd say. Definitely more so in the past couple of years than prior.
Maybe we can raise money without living in San Francisco. How about outside of the USA entirely? Like even leaving aside how those startups might be evaluated, is there any extra logistical hurdles if your company isn't based in the USA?
Yeah, well, for the first time this past year, the majority of US VC money, by just a percent or two, was going outside of the United States, which is a really big deal, which means that the primary market for VC investing is recognizing the value cross-border. Now, there's a lot of hurdles around that, right? So one, you need to understand that market that they're in. If they're a company operating overseas, typically they're trying to initiate their growth in that region. So you need to be very smart about how you're deploying capital if you don't have expertise. Like if you're investing in India, you don't know anything about the Indian market, not a good idea. But what this is doing is you're seeing the globalization of venture investing happening. And I think it's very market specific. I don't think there's a one-shot answer here to what the obstacles are. I will say that, there are norms in VC investing in the United States that even if you go to, Europe, there are different expectations, like even around things like valuation, growth, just inherent to that, where they're domiciled. But again, leaning into kind of the last question is, I think over time, this is all going to normalize.
Do you have settings for the investors to search for impact founders?
Yeah.
Like that, Andrew.
Yeah, absolutely. So we have tags in our analysis for things like female founders, let's say minority founders. Those are all things that we would allow as a filtering mechanism, right? Because that's becoming not only just a trend, but a lot of cases a mandate for some of these funds, right?
Nice. That's great to hear.
So Ian Johnson in the chat had this question: what are investors looking to see from a founder in an initial conversation at the pre-seed level? What are the positive signals and the negative ones that they're looking for to know that this is the right person to give money to?
Yeah. So it's not a one-size-fits-all approach, but what I have learned from pitching to hundreds of investors at this point is that they're looking for people that first thing is they want to see that there's some type of alignment in value. So if you're working at a VC fund, it's because you believe in their underlying thesis and approach to evaluating companies, which is a proxy for how you look at the world. Right. So when they're evaluating a founder in that conversation, they want to know that just from a fundamental level that your values are the same. And then after that, they look for, proxies for competency, right? Do they have domain expertise? Do they have relevant previous experiences? And that's why there's such a preference to founders who have started previous business before, even if they failed. Failure is not really seen as a bad thing in this space. it shows that you're learning.
One last question on this particular topic was around the relevant experience of the past. And from a personal perspective, I've worked at companies Series A, Series B, and have been through exits at a senior level at those companies. But then I've also had like 1,000,001 failed side hustles. So when you're in those early conversations with somebody, are they valuing the experience in actual startups in an employment sort of role, or would they value the side hustles that didn't work out more so? That's what I haven't been able to figure out in some of those early conversations.
I think being in that position is a lot of times very unique, but a massive advantage because it tells them two things. One, if you're able to do both at the same time, I did the same thing. It tells them that you're a very effective planner and that you can juggle a lot, which is, startup 101. So that's a good thing. And the other thing that it tells you is that you're comfortable both in a large corporate environment, which is a good proxy for understanding how you would operate. Let's say if this company did become a large organization, so that box is checked. And then if you say that you have experience starting up businesses, you know what it's like to be by yourself trying to get something off the ground.
Cheers. That was great. Thanks for the answers there.
Somebody that's never pitched to an investor before, what should they expect going into these meetings? Are they more like a job interview? Or are they a sales pitch? How would you prep somebody for that?
Yeah, it's I hate giving this answer, but it really depends. I think when you're starting off a pitch, the best thing you can do is establish some type of mutual ground, right? It takes, just from a psychological perspective, it takes the listener into another mode of thought, right? Where it's more conversational. And I've seen that the more conversational these pitches are, typically the more effective they are, because you're not focused on nailing every potential bullet point in your head. It's flowing more naturally. You're actually probably able to communicate what you're trying to more effectively. It just decreases the stress in the room. But there are times, especially when you get down the road, into true like due diligence, where it's not about, paint me the picture of, where you're going to be in 10 years and rainbows and sunshine. It's like, how do the mechanics of this product work? How do you scale up against your competitors? And that's when you really kind of have to shift gears and be prepared, with all the answers possible. Like what I do before a pitch, I think about all of the different elements of this fund that I'm going to talk to, and what are the things that I know that they might ask relevant to their strategy, right? And what are those answers, right? And having that framework just written out has been so helpful, because you kind of go into your Rolodex, and sometimes it's going to go unscripted, right? And then you're saying, oh, well, I had this answer for an investor 3 weeks ago. This is how we want to respond to it. So it's going to be, it'll be kind of a mix. Sometimes they want to keep it really high level, especially if you sent the deck to them ahead of time. Those are actually the best conversations I find, is you send them the deck, they analyze it. So then it just becomes a conversation around, they're testing your hypothesis, right? As opposed to giving a presentation. So sometimes that's super helpful. Sending the deck ahead of time, they get in the call saying, hey, I understand what you're doing. I want to ask a few questions here. But you do run into those investors from time to time where their prerogative seems to be like shooting holes in a business plan, and that just comes with it. If you talk to 100 investors, there's always going to be a small portion that take that approach, and that's just a methodology. Some people do that just for the sake to see how you work under pressure. I've seen some absolutely crazy things. There was an investor that I was introduced to, and the person who introduced me to said, just give you a heads up. His method is you're going to go on the call, and he's going to take the call in a crowded coffee shop without going on mute. So you're going to have to give this pitch with all this background noise and try to stay, you're attentive and really deliver this thing. And, his theory was he does this just to see how founders respond. Now that's kind of more on the, definitely an outlier, but I guess what I'm trying to say is people are always trying to test their own method for evaluating people. And sometimes that's just seeing how they present. Sometimes it's seeing how they engage with them over the phone. Sometimes it's seeing how they respond to emails. Sometimes it's, how do they respond to pressure? Whatever pressure I can throw in them, because again, that in some cases could be a really good indicator of how things might go down the road when things get tough. But that's just what I've seen.
That was really good. Thank you. I wanted to ask you as well. So there have been a lot of changes recently in the United States, the rules around, becoming an accredited investor, or like crowdfunding now, new limits, things like that. If I wanted to use my Peachscore other places besides, like, let's say I wanted to raise money with crowdfunding, could I use my Peachscore in other places?
Yeah, it's a really, really good question. I'm glad you asked it. So the way Peachscore is positioned is the same way that, let's say, a credit score would be positioned, right? You're engaging with your credit score beyond, the FICO website. When you go apply for a loan or a lease at a car dealership, you're sitting down, they're running that score so they can understand, who you are, what's your credit history. Peachscore is built to kind of be embedded into those outside processes. So we've seen, outside of our platform, founders putting their Peachscore profile at the end of their pitch deck, right? So they're pitching at, let's say, an accelerator pitch session. At the end, they have their Peachscore profile, and score right at the end, right? So now the crowd understands at a high level, okay, this business is structurally sound. They kind of they're rating on the higher side. That's a good indication. So that's how we see the Peachscore being used.
Okay. I just have one more question, as I know we're like the time and stuff. We talked a lot about the things that are not necessarily on paper. Grit, growing up in these hard situations, potentially overcoming adversity, etc. Is that accounted for in my Peachscore? Like, how do I input that data?
That's an amazing question. So the way we look at it is especially with early stage investing. Once you go to like Series B, C, D, all of that, there's the impact of the founders at that point is not as powerful. So it's not about their personality as much. It's about growth rates and things like that. So when you look at early stage investing, try to encapsulate all the complexities of the real world and determining personality and things like that is basically a fool's errand at this point. Like, we don't have the technology to do that. But what we do is we provide a counterbalance to just the gut feeling approach of getting on a Zoom call or going for coffee. So the way that Peachscore is built is basically to be a bias breaker. So you have a meeting with me, you like me, I'm telling you about my business, it sounds great, but you run the Peachscore profile and that may kind of test that assumption, right? Here are the underlying fundamentals. So right now we're not evaluating the psychographic element of kind of, of the founders. But we are thinking about how do we incorporate that in an effective way, right? Because there's no one size fits all approach to that.
Yeah, I like that because it's come up a lot today in this chat. And I think that there's a lot of indie hackers or makers or even bootstrappers like myself, at least I can speak for myself, that I get turned off by venture capital because of all the negative things that come with it. And already I have a chip on my shoulder about that. And part of my journey has just been getting over that and being like, okay, that's another adversity that I'm overcoming along the way. But by the time you finally get to that place, are you so bitter and beaten up as a founder that you don't have the energy to even build your business anymore?
So I wanted to ask, though, while I do have the mic, speaking of bootstrappers, if you are running a bootstrap business and maybe you already even have some traction and steady growth, at what point should you reevaluate that strategy and consider raising money versus continuing on as a bootstrapper?
Yeah. So generally speaking, there's kind of two milestones, we'll call them, that force you to reevaluate your fundraising strategy at a very like fundamental level. One is the negative, which is like, if I don't get this business funded in a month, we're going to go under, right? So that's the obvious one. The more rosy picture is when you say, man, this is going pretty dang well, but it could be going 10 times better if I had, cash in the bank. So depending on where you are in the cycle, that would be the qualifier to really like evaluate your how you want to raise money.
Coming from that negative space of, oh no, we're running out of money. How do you still spin your pitch such that investors see you as an attractive investment and not a sinking ship?
Yeah, that's a really good question. And sometimes it's especially for first-time founders, raising money is really difficult. So sometimes because you're not able to raise money does not mean there's some kind of inherent flaw with the business. It just means you're not very good at raising money or don't have the resources to, or the relationships, right? Kind of talking about what we mentioned before. But I think you need to have a presentable thesis to the investors to say, this is the reality of the situation. Maybe we're not in our ideal scenario right now, but look what we could be doing. It's a trade-off. It's an exchange. If you solve this problem for me, look what I can give back to you. And if there's a strong case there that you can, write in a cohesive email or present in a presentation, that'll still hold true.
Andrew in the chat, seconded by Parth, has this question. How much money have you raised personally for your ventures? And what expertise does Peachscore have in order to be able to even accurately be creating these scores and evaluating startups?
Sure. So I'm not going to release how much money we've raised to date without express permission from my team on this. But we've basically been through a series of fundraising from pre-seed. Now we're into our seed round. And what that has entailed is you're going through different cycles of investors. So some of our experiences, we understand how different types of investors respond to your business. When you're raising pre-seed, you're raising from, let's say angel investors or whoever your early adopters are. That is a whole different framework of investment than, let's say, institutional funds. The expectation is different. In fact, it's not even just based on the size of the funds or what round you're in. It could be even broken up by geography. Like one of the biggest differences in investing in the United States is East Coast versus West Coast. West Coast is spray and pray. Let's fund as many deals as possible. And one of them will be the next, Uber, right? That's one methodology. And that's because there's such an abundance of capital on the West Coast. If you go to the East Coast, right, it's a little bit, sometimes a lot more metric driven, revenue, traction, prove to me that I should be writing this check because, there's investors that there's fewer investors there. So they need to make, they're all fighting for the best deals, like the safest deals. So it varies in that case. And in terms of our experience, my co-founder, Alex, he was the founder of Plug and Play's media and advertising practice. And Plug and Play is one of the most active funds out of Silicon Valley. They invested in Dropbox, they invested in PayPal, they invested in Honey, Lending Club, multiple really, really high profile unicorn exits. So we basically built the system understanding how VCs analyze this market. And then we have a technical expertise, right? We built this engine to be dynamic and adaptive to the market. So it's not just about analyzing 50 years prior, but also analyzing what are the trends that are coming up, because the trends are changing. Everything I mentioned before, you need to have a dynamic outlook and the engine needs to be able to reflect those changes. So it's that combination, technical expertise and being VC investors and entrepreneurs ourselves, which put us in that unique position to create this technical infrastructure.
Maybe looking at it from the investor perspective, how are you able to convince an investor that, yes, like we are authoritative in being able to generate this score and you can trust us if we say this company is doing well?
Mm-hmm. Yeah, that's not an easy question to answer, because basically what you need to do is fundamentally get them to agree into the approach to modeling, right? So once they agree to the fundamentals of how this market can be analyzed, then it's just a matter of, are they going to place a bet that we can execute on it? So it gets technical pretty quickly, but it leans into that whole approach of this needs to be both a combination of a system of expertise and something that can change over time. And that's the winning combination, because you can't have a system based on a framework that's existed for a long period of time. And you can't have something that's just totally dynamic that doesn't have any grounding in reality. So you need to bridge that gap. And quite frankly, it comes down to the technical, can you deliver on the technology? All of this it means nothing if you can't create that infrastructure in an effective way, right? This can't be done in an Excel macro, right? Like you really need to be a data scientist to execute something like this, because we're analyzing hundreds of thousands, if not millions, of data pieces every day to train this algo. So it's a very technical endeavor.
Andrew, thank you so much for coming on. We are at the end of the time for the Q&A. Sorry, Alec, we didn't quite get to yours, but I think maybe that one's a very quick one. Should CTOs be at a investor meeting? In a word?
Yes.
That's what I thought the answer might be.
Yeah. I would say yes. Ideally, your CTO would be there to basically back up any questions that the investors would have. Added bonus if they can sell the product too. If you get a CTO that can sell, that's a killer combination. So if you have that, definitely utilize it.
Do we get that Indie Worldwide discount set up on Peachscore? Is that live?
Yeah, absolutely. So anyone that signs up, we will give you guys free 1-year access to the platform. So just make sure you register and we will verify your account and you guys can get rolling. Definitely encourage you guys to invite your friends. That's super helpful to us. And, me personally, I'm available whenever you need me to go through your business. So always happy to help out fellow founders.